Look, I think being prepared to be more active is something that is something we should all think about, and that's what we're trying to do through objective-based investing. But just when you've sort of taken away the handcuffs from a strategic asset allocation philosophy, you need to be conscious about how you're using that freedom. The idea for us is not just simply to add risk, but also to abate risks on the downside. For us, really, it's about making sure that we use that bandwidth in a structured way, and a key part of that is implementation. To do some of the things that we're talking about in a traditional fund-of-fund structure, one is a little bit blunt. You've only got 5 or 6 instruments to think about. And 2, the transaction costs of spreads in and out of funds can become quite prohibitive. So we've prepared ourselves to be dynamic through thinking about how we think about implementation. And we bring those frictional costs down from, say, 20 basis points to 1 basis point. Suddenly the breadth of opportunities that you can then add value to the portfolio opens up at a multi-asset level. And by no means are we trying to solve this conundrum by ourselves. One, we're looking to add value from active decisions in terms of tilting equities versus bonds or currencies and commodities. We're looking to take regional tilts. Sort of an example that might be to be overweight Japan, underweight the US. Then there's also, we can use our internal teams to help us with thinking about security selection and adding value through those parts of the portfolio. So it's really about preparing ourselves to bring in all the tools that are available to us to actually deliver on those outcomes. So more interesting perhaps over the last 6 months, we've actually been on our more sort of shorter term views over the 1 to 6 month views, been overweight bonds, underweight equities. Now equities have performed quite well, but the bonds have performed exceedingly well as well. So we've actually delivered on our outcomes for our clients by actually taking a slightly more defensive posture than perhaps would have been expected at the beginning of the year. Equities bonds is the biggest call that we can make. We can make calls in commodities as well. We've actually been underweight commodities, but within commodities we've been skewed towards energy over soft commodities, which has been a positive play over the last few months as well. We are starting to see that tilt to long bonds start to diminish over the last few weeks and months as we've seen the market pricing play out. So it'll be interesting to see now what we see coming forward through our models over the next 2 and 3 months.